Hi there, traders. This is Brad Gilbert. Now, let me just give you a debrief of everything that's happening in the markets, right? The whole Trump fiasco is really hitting top gear, and that really combines. I was saying on sort of Thursday, Friday, the big unknown and the sleeping giant. We hadn't heard from them, right? And I'm talking about China. They've come back with a 34% retaliation of the tariffs on US goods. They've also changed a bit of legislation to basically ban a bunch of US companies in China, right, as well. So it's escalating very quickly, the behind the scenes trade war between those two countries. Now, you come into Friday, I'll show you the non-farm payrolls, much stronger US. Well, the unemployment rate was slightly higher, but much higher non-farm payroll change. Okay, supports a stronger dollar, right? Now, this is where everything gets a little bit pear-shaped, and I just need to unpack a few things for you. I've been trading for 35 years, and I've seen a bunch of these things happen. It can get rather chaotic very quickly. Now, the Fed funds futures have factored in 120 basis points of Fed cuts, right? We've been sitting there. The Fed have told us they're going to cut, by 0.25, zero point 0.5 or something. Now they're looking over 1.5% has already been factored in. They're going to have to start doing something very quickly. Now, crude stocks are down 2%. What we are seeing on a lot of the equity markets on the open, right, is a bit of a free fall. Now, you look at the US equity futures, right? The Nasdaq E-minis was down about 6% like 5 minutes ago, right? That's just come back a little bit, but everything is getting hammered right across the board. And you're starting to see the main instruments here. There's a couple that are in play. Aussie and Kiwi, right? They are getting drilled, and the liquidity. There's no liquidity in the market. The banks aren't going to put liquidity in at this point in time, especially the start of the Asian session. So if you're looking at the pairs here, really focusing on which instruments are directly impacted by everything that's going on. Aussie and Kiwi, right? The commodity currencies. And then also the safe havens, the Swiss and the yen, right? This is where you probably should be having a look around. Now, I'm not suggesting you rush straight in and get busy, but that they're the ones that we know what the impact is of the tariffs, especially on China, Aussie, Kiwi in particular. And now the safe havens, yen and the Swiss, well, they're just an overall market sentiment. Like, let's just get out of everything. Let's go park our cash in the yen and the Swiss for the time being. So as you can see here on the safe havens here on the dashboard, they are looking pretty good. Now there's a bit of an exit of gold positions. Cryptos or Bitcoin is starting to get hit there as well. So it's pretty hard, right? This when you see a global event like this, and I'm going to take you back to the global financial crisis to give you a bit of a look, but it's hard to park your cash somewhere, right? That's why the yen and the Swiss end up being the sort of safe haven profile, because you know what, everything is sort of slightly impacted one way or the other. Now, let's just have a look here. Let me just come across to the charts. Now, we're looking at the Monday open, right? Now, it's going to be loose. Like, liquidity is stretched on any sort of given Monday. But you look at the Aussie, right? It closed the market around 60 and a half, or 60, 35, 40 around here on, Saturday morning or Friday night in the US. It's been down under 59 and a half. It's back around 60, right? So that's just the market feeling out stop loss liquidations and these sorts of things. Now, the other thing, actually, I forgot to mention is around these events, right? You usually find the biggest fund managers or massive fund managers exposed to these massive events. And you know what? We may see, or we may have already seen some massive liquidations, and that'll be some of these fund managers just getting like drilled and taken out of the game completely, right? And it wouldn't usually be one, there'd be a whole handful of them that are absolutely destroyed on this situation. Actually, let me just highlight one other thing. Obviously, China, right? If you're a commodities trader, they're all getting smashed as well, right? Because if these tariffs are going to slow China down, well, they are the biggest like user consumer of all these commodities, right? So commodities, you've got to expect them to get absolutely drilled, especially with the Don, right? He's on the weekend been texting China's panicked. They've made the wrong choice, all these sorts of things. Now the markets are as I said, like the Fed fund rates, right? The expectation is for the Fed to start cutting pretty soon, right? And you're like, didn't they just talk about not cutting? Now this situation may force that issue. All right, now let's just come back to the chart. So looking on your hourly charts, it's a bit of a waste of time at the moment. You need to be looking at your daily charts to try and get some perspective here of what the hell is going on. Now, we did see euro and sterling have a cracking like Wednesday, Thursday, and now they are rolling over. They're a couple of 100 points lower than where they were. The Aussie was around sort of 62 and a half, okay, on the initial sort of rollout of the tariffs. This is pre-China, right? And then obviously that's been absolutely drilled as China's come to the party and said, we're ready to fight. So that's where we are. So you're looking at these charts. Now, in particular, as I said, Aussie and Kiwi are very easy to connect to China, right? So these two pairs, say for instance, and the Don isn't going to come back to China and do a deal straight away, but say there was some good news out of the US and China. Say, for instance, the Don did come back and say, you know what, China will make it 15%. Well, Aussie and Kiwi are going to go through the roof, right? They have been under so much pressure for a number of months, and then this would be a good thing to be looking at. If it escalates, well, you're looking to get short Aussie and Kiwi for the time being on any retracements, any sort of relief rallies on the hourlies or dailies for sure. If you look at dollar yen, right, the safe havens focusing very clearly on the daily charts. Now, if I shrink that up, now you can see here we've just like it's trying to get down there, right? But it hasn't just gone just yet. Now, you might be thinking, oh, well, this has gone down a couple 100 points. It can't go any further. I can show you the global financial crisis. Some of these things were moving around 300 points on every day for like almost a year. So this is where the market's really kicking into gear. Now, if we do go through this level here, is it enough to get things moving? I think so, but definitely below this bottom longer term trend line, it's free fall, right? It's free fall. And when I'm talking free fall, literally this thing will be moving 100 points at a clip, right? So that's so you need a big trade plan, smaller positions, and an overall bigger trade plan to manage the spreads that you're going to see from the brokers. Now, dollar Swiss, actually, let me come into the Swissy here. I was having a good look at this because it just reminded me so much of the what's happened over the years, right? And you can see dollar Swiss. I mean, we are coming up to a bit of a key level here. We've had sort of three touches. Now, back in 2015, the Swiss National Bank, right, leading up to January 15th, 2015, was sort of saying, we're not going to let Euro Swiss go below 120, right? And they were like holding the whole market. And then they walked away from it. And in one day, in a matter of hours, actually, right, this thing dropped from 103 down under around 77, I think it was, or 70 under 70, right? Like 40 cents in a day, or 30 cents. So you think 2 cents in a day is a lot, but it's not. The whole situation, and to me, this whole calamity and what Trump is unwinding is the global financial crisis, sort of '08 to sort of 2010, right? And you can actually see where it sort of finished. Now, the dollar Swiss '08 was sitting around 120, 120, 122. And then it dropped 50 cents, right? 50, right? Not like 200 points, 5,000 points over the course of that period of time. So, like the markets will bounce from this and they will correct, but it just takes a little bit of time to sort of really get in the groove, right? What we need is we need some sort of retracement, which would be good, But you know what? You don't have to look for the full technical retracement. The markets are going to be reacting very closely to momentum, and you really need full liquidity to assess what's going on. The Asian session on a Monday, at the sort of really where the crisis has escalated, is absolutely crazy, right? If you're looking at the price action here, and if I just change, say the chart into a 5 minute chart, you start to sort of see, right, there's no liquidity, right? So 5 minutes, Aussie's gone from 60, 10, down, like dropped 70 points and then back up in a matter of 15 or 20 minutes. There's no liquidity there. And there's heightened risk around trading the markets when there is less liquidity in the market. Now, by all means, am I looking to get short on any sort of rallies here? Absolutely. But today, I would think, you know what, in the Asian session, we're probably maybe not going to see it. But let's just keep a close eye on things as we go forward. Now, so we've got the other one is just having a look at the Swiss. I mean, not the Swiss, the yen on a longer term perspective, right? There's sort of one odd one out here, right? So dollar yen's down, Aussie yen below the cloud, Kiwi yen, sterling yen, CAD yen. Euro yen has not yet broken down below the cloud, right? It's sort of sitting there. And this sort of lines up with the euro. And I don't know what the EU officials have got up their sleeve, but at the moment, the euro is rallying, right? And it's, you know what, there's a, you got to say, like the Don, he's in it for a bit of cash. So if they're doing a separate deal, and I know that the head of the EU trade, whatever they want to call it, he's having a special meeting with the US officials today, this week. So, but the odd one out is euro. It is holding up, and it doesn't make sense unless there is some sort of deal coming. Now, if that doesn't eventuate, euro yen is a great opportunity to be getting short here. But as I said, you're probably trading off your daily charts at the moment. You can come back and finesse levels, technical levels, and what have you with your hourly charts, but stick to the daily charts and look for opportunities here. Now, I've wound a lot of the time frames back. You can start to really get in here and as I said, with the pairs that do make a lot of sense, Aussie, Kiwi, Swiss, yen in particular. So do we see bounces or do we see a follow through? Well, to me, it really depends on what we see, what news we get out of China and the US, how this sort of develops from here. Now, Trump has said, no, there's no deals to be done here. So we have to keep a very close eye on what's going on. Any sort of breaking news is where you're going to see things come into play. Now, fundamentally, we do have like what we've had is like it's like the forest burning down, right? And we're ready to sort of get going. Well, it's almost fully burnt down. If you look at the 1 week, right, the month to date and the week to date US equity futures, this is a good reflection. Now, this is still pretty hot, right? Because we're down 4, 5, 6%, depending on which ones you're looking at. And that's going to be reflected across all the global equity markets, right? And this is the raw nerve of the global markets right now are the equity markets, right? And so if I come over here to the full monitor page and you're looking at, so you got North American equity futures, Asia Pacific, and then so the European, they are getting flogged, right? They are getting flogged. The Aussie and Kiwi are the standouts, right? Swiss and the yen, right? This is where you could be trading these events. The actually, which just reminds me, if you come back over here, right, and it's looking at the equity charts. Okay, so once again, if you're looking at the equities on your hourlies, you're gonna, they all look like they've just stepped off the edge of the precipice, right? So they're all sort of getting drilled. And this is so the Dow Jones, S&P, Nasdaq. Then you've got the Nikkei, FTSE stocks, DAX, and the Australian All Ordinaries, right? So the All Ordinaries have been getting hammered for a month or two, with the potential for China to be getting involved here. You look at the dailies, right? This is what you need to be looking at. And there'll be stop losses here on these. So this is the open, right, of the Dow Jones and the S&Ps. These are the minis, right? We don't have access to the full data. These are crapping out, right? And they are breaking major levels. The Nasdaq has already broken down. You've got the Nikkei. Well, we'll wait and see once the market opens. Um, the stocks, European stocks, has broken down. FTSE's broken down. The All Ords have broken down. What I'm talking about when I say they're broken down, they've broken long-term technical levels. This is where fund managers, they have all their big risk profiles and they've got all this, they got their cash parked in a lot of risk events. This is probably the one area that they did not see coming, right? The impact. So we could see some massive, you see, I was going to say some massive cleanouts. You'll see the breaking news, and there'll be reports of fund managers X, Y, and Z bankrupt, 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 bankrupt. This is where it gets really interesting. And what they do with those positions, any exposure in any portfolio, they liquidate. And you liquidate in a market where there's no liquidity, that's when you start to see these wild moves. So I'm expecting to hear at some stage over the next 24 to 48 hours some carnage from major fund managers, right? So like it just smells of it just smells of pain. Okay, so that's where we are. Like you look at the if I just come over here to my sort of my bigger equities page, you look at this and it's just like yeah, nasty. You do get some firms coming out going, oh yeah, this is a great time to be buying, and you're going to get some specials. I don't think it's finished burning yet, right? They haven't burned the house down just yet. That's when you'll see a 5-6% bounce. That's when you know you're close to the bottom, right? At the moment, we aren't there yet, right? So just be aware if you are looking at the markets, just let them burn just for the moment, right? What we want to be doing is trying to focus on like sometimes you just don't see these things coming, right? And the last couple of 100 points or 200 or 300 points on some of these currencies and definitely the equity markets wasn't foreseen. It's the fact that China did retaliate. We got the stronger US non-farm payrolls. It is all one big sort of everything lined up perfectly. What we're waiting for is we want to see something hit the turf, as in hit the bottom of the market, then we can sort of start to go from there. But if we see, as I said, any sort of sign that there's some sort of deal coming about between China and the US, well, we're going to see that's when the stocks will rally aggressively, the dollar will fall, and everything will come back. Until then, you've got to sort of sit tight and look for opportunities to potentially get in. You want to have, as I said, smaller positions, right, with a bigger stop loss to keep you in the initial entry position, and then tight trailing stop losses, right? You need tight trailing stops. And I don't mean like 20 points. I'm like talking 50 points at least, right? 50 to 75 point trailing stops to try and keep you in the trade. But if there is an announcement, you get taken out and you're still locking in some cash. That's the way you've got to play it. Now, as I said, check out your Swiss and your yen charts. They are definitely worth a look. Aussie and Kiwi on the crosses there as well. We'll see how they play out. But, it's so early in the week. The markets have just turned on. We are looking at some very loose markets, right? These are the currencies you want to be looking at, and let's just see how it plays out. The stuff that you can't see are some of the news updates, and what I'm talking about there. As I said, you know what, they're factoring in 1.2% cuts at the moment by the Fed. That may escalate, right? So this is a big fundamental shift, a massive flush out of stale positions. There's no way over the last sort of since the pandemic that all these companies across the globe, but particularly in the North American area, have made that much profit, right? And they are getting hammered because it's so artificial, their stock prices. This is the correction we needed to really flush out the financial markets. Bank stocks globally are getting drilled, right? There's going to be banks going under, you would expect. First would be the fund managers. And then we'll see how things play out, right? It's exciting. You just got to be careful with what you're looking at and when you're looking at things. And are the fundamentals going to come into play this week? Well, they should, and we've got a hell of an opportunity here. Well, whether it's a hell of an opportunity or we find out some more information about this North American or the US market is, all right, I'm on the wrong page. Let's get you on the right one. The US CPI numbers, right? These are going to be a bit blown out of the water, but it's going to be interesting to see what these numbers are, right? Because is it going to have an impact? Well, it can if it goes with the current market, right? So, like the market, the dollar's sort of rallying at this point, okay, against most things, right? Well, that's a bit of a misnomer. It's sort of up and down all over the place. The We saw the non-farm payrolls, stronger employment numbers. The dollar was already going well. You got China on top of that. Now we're going to have the US CPI numbers. Are they going to be any good to us? It's probably too early to sort of say at the moment, but we will have a closer look and try and determine if there is something that we can work with. The fact that the market is factoring in rate cuts, right? You start to see, and it's too early, right? This has only just happened. It takes a couple of months for the CPI numbers to be impacted. Now, the Fed's saying the tariffs are much bigger than expected. We're going to have higher inflation, lower growth. Well, we're seeing that across the global equity markets at the moment. What happens with CPI numbers? Well, we'll have to wait and see at the time of the event to see if the dollar's got a clear bias one way or the other, and then see what the impact of the numbers is, whether they're stronger or weaker, and then see what the Fed are going to be doing. The central banks are going to have their work cut out to try and calm the markets down. That's their job, right? Diffuse extreme volatility. A lot of fund managers, banks in the US are already saying the chance for a recession in the US is above 60% now, right? So anyway, there's a lot of noise, and there's a lot of carnage, right? So let's just see how it plays out. I'll keep you in touch as much as I can. I'll be giving you another update during the probably at the start of the European session. I will be running a live session on the CPI numbers, probably more to sort of feel out what's going on, see what the impact is, and those sorts of things. Because you go back and have a look at the price action around '09, '08, '09, in particular around the global financial crisis. A lot of the currencies were doing 300 to 500 point ranges every day, right? Like some of the exotic crosses, but they're the major pairs, right? So we're in for some interesting times. There should be some cracking opportunities. We can be patient and look for areas where we know where momentum is, we know what's going on, and if it's breaking levels, then Aussie and Kiwi are in play, Swiss and the yen, and then you'll start to see as specific deals are done, whether the euro, which is doing great against most crosses at the moment, whether they're going to get a special deal. You'll start to see how things are moving there. Get a bit more confidence, smaller positions, as I said, bigger stop losses, and much bigger take profits. Right? That's the whole setup. All right. I know this has been a bit long-winded, but there's a fair bit to unpack, and there's a fair bit for you to absorb. Right? Trying to get this level of understanding comes from witnessing these events in the past. Right? So. Anyway, let's see how we go. And there's no need to rush in on a Monday, just like normal, right? So there's no change. What we want to see the markets as we go into the European and the North American session, if they do start to calm down somewhat, right? That's when we can come back to the table, right? And then I just can't I sort of love it when it gets crazy like this, but like the year to date. Equity markets could easily go down 50%, right, on a year-to-date perspective. There's loads of false numbers in there, but we'll see how it goes. Yeah, well, that's it, guys. A hell of a lot to sort of think about and look at. The main thing is stick to your daily charts, get your news services up. This is where something like Metastock really comes into play, so you can keep a track of what's going on. Okay, so. So that's it. I'm just sort of reading some of the breaking news there, and it's like the Fed futures are up, they're down, they're all over the place, right? And this is, as I said, maybe some funds are getting liquidated, The markets, there's no liquidity, so everything is very extreme. I would expect it to be extreme until we start to get into that European session where we'll get a new flurry of momentum, and then we can start to work out what the hell's going on. All right, guys, good luck. Exciting times ahead, and let's just see how we go with this one. All right, have a good one. Cheerio.